look, they had security of funds, fiat on and off ramps, great banking relationships. They obviously were licensed and very compliant with AML and KYC standards that were very high. But then you looked at the product and, some people out there are charging like $30, $40, $50 spreads on Bitcoin, sometimes as high as $200 spreads on a Bitcoin CFD. And they're only really offering 5 to 10 crypto CFDs. The trading hours aren't always great. The liquidity is not always strong. So great compliance, great regulatory and banking, terrible product.
Welcome back everyone. Today I'm sitting down with Marcus from EightCap and we'll discuss cryptos today. We'll focus on how to trade cryptos, how you can get started in cryptos yourself, and how to make it work in the market. So how's it going, Marcus?
Going good, Edian. How about yourself?
Very good, very good. So let's begin. And I wanted to give people a bit of a background about who you are and what you do.
Sure. So my name is Marcus Fetherston. I'm the Director of Operations at EightCap. EightCap's a FX and CFD broker headquartered in Melbourne, Australia. We've been in business since 2009 and have since expanded to offices globally in Guatemala, London, Cyprus, and Bulgaria. We specialize in many different asset classes, FX, index, and recently expanded into the crypto world a bit more, which is what I'm here to talk about today.
Awesome. Very nice. So let's begin and tell me what's the advantage or why would anyone care about trading cryptos? We hear all these news about how it's pretty volatile, it's going to crash, it's a bubble. Why would people care about trading cryptos?
Yeah, I think the question isn't why should they trade cryptos, but why shouldn't they? And I think that's come from my personal experience, my mindset on that. I mean, I remember I was always really ideologically behind cryptos, read a lot of books on it, supported the underlying idea of decentralization. But the thing that I guess really held me back or made me ask that why should I question was just the lack of infrastructure that we were seeing out there or practicality. When it's just a price on a screen, 10 years ago on Bitcoin, it sort of made it hard to throw a lot of cash or speculate on it heavily. Fast forward 10 years and the question is, why shouldn't you? I mean, when you take a look at the world of DeFi, all the protocols that are coming out, we're just seeing technology that really even surpasses traditional finance. So it's not a question of looking at it like it's something exotic. It's just surpassing, I guess, what we're seeing happen in the traditional financial world, in the technology sense and even in the trading sense. I mean, it's open 7 days, so it gives people a lot more opportunities to trade, and it's a lot new. Bring a lot more technologies into the market for people to, I guess, passively bring into their trading strategies. So there's just a lot more opportunity, newer technologies and things that are just really surpassing the traditional financial markets. So you definitely, whether it's speculative trading or whether it's long-term investing, you definitely want to have some exposure to it in your portfolio at this point in time.
So tell me, you trade cryptos yourself. Tell me how you do that and what you kind of look at when you trade cryptos.
Yeah, so I trade cryptos and I invest in cryptos, and I sort of make a very specific differentiation there. I think when you're looking long-term, for me, it is more of a technology play. And I think it's looking at all these options out there. I mean, we're very spoiled for choice with crypto right now. And we're definitely seeing some almost wars between the layer twos and the smart contract blockchains, and Solana versus Cardano versus Luna, and all of these different kind of options out there for very similar things. And so I think long-term, it's really a technology play into where the value is and which technology is going to bring crypto to the forefront. So that's long-term investing, keeping coins in my wallet and thinking of ideas like that. In the short term, I take much more of a technical approach, I think, to trading, and that's where crypto derivatives come into play. I'd rather use my long-term capital to invest in the underlying coins for technological or fundamental reasons. And in the short term, we just see, I think, cryptos obey these great technical principles that we used to see really, really prevalent in forex. But I guess just due to current inflation and interest rates, we're just not really seeing the same movements in those classic markets. So it's kind of funny that I invest in crypto long term because I see it as a really innovative technology. But I guess in the short term, most of my trading is based on classic forex technical principles for my trading. So it's kind of a binary approach to long term and short term in how I really trade.
Do you find like the technicals work better in cryptos and forex, or is it about the same?
Well, it depends on how. I mean, the strategy works as long as the market stays in a certain way. And I think what we're seeing is, crypto, it hits these huge periods of volatility, massive volatility, where I think when the implied volatility reaches a certain I guess, thresholds, you almost want to throw the technicals away for a period. And that's when I have certain indicators that do get surpassed, I almost just want to step out and not trade, because it's any man's game at this point. We're seeing the markets go wild, and when they're really volatile, a lot of the technicals don't get obeyed. But when they settle off for that, when they hit these, crab seasons, I guess, and they hit these sideways channels and pricing corridors, they just obey technicals, I think, way better than we've seen a lot of forex markets in the last 12 to 18 months behave. So it's, to answer your question, yes and no, it depends on what the market's like. When it doesn't obey the classic technical principles, it really doesn't. But when it does, it really seems to stick on trend. And there's a lot of great opportunities for traders to take advantage of.
So what would you recommend someone who wants to start to trade crypto? Should they kind of look at only the major cryptos and trade those? Or should they kind of look on a broader perspective and try to find coins that are good at trading for them?
Yeah, well, I guess it depends on what their goals are. If they do want to come in and be a trader in the short-term sense, or they want to hold coins for years, or how they operate. The way I've seen the crypto space develop over the last, I guess, 5 to 10 years is kind of like I always call it like the crypto pyramid, I guess. At the bottom, you have this foundation of ideological believers in crypto. These are Bitcoin hodlers. These are people holding it for 5 to 10 plus years. They buy it, set and forget, and that's it. In the middle tier, as we move up, we see a growing number of people that are really technologists. This is what we saw, I think, come out of DeFi summer and all these great layer 2 protocols and side chains and great technologies that are really helping to empower the underlying cause of crypto. And then at the top of the pyramid, we have this really small layer that's growing massively of technical analyst traders, short-term traders. These people aren't looking at trends in the next 6 to 12 months. They're looking at hours, days, weeks ahead on the charts to take positions. So I think where someone begins depends which one they fit into. I know a lot of people that they're at that bottom huge tier of the pyramid, and they're just they're coming in, they want to buy and they want to hold it. And in that sense, you probably could just invest in the top 5 or the top 10 and really sort of take on some exposure to the market and just try and capture the underlying trend of crypto. And that's fine. I think that's a good strategy to have. But if you're someone who is more into the technology, you're liking what we're seeing with DeFi, you believe in decentralized finance, I think taking long-term positions or even some light technical speculative trades on more ERC20 tokens, DeFi coins and tokens, governance tokens and things like that might appeal to you. And then if you're someone who does come from a trading background, or you're someone who, is a bit more analytical and wants to trade short term, then you're going to come in and you're going to trade that, be in that, top small echelon of traders that's growing massively that just want to take more short-term positions on cryptos. And in that case, when you're a technical trader, I think which coin you invest in, being it's the top 5 or more, it is slightly less relevant because you're more looking for technical price movement. And as long as the market is liquid, you're not going to go out and trade the 10,000th highest or lowest, I should say, market cap coin because you're not going to get much movement on it. As long as there's movement and you can see something underlying happening there, then I think you can definitely move out of the top 5 or the top 10. But having some underlying knowledge of what's fundamentally going on with that blockchain and the underlying technology is always necessary, because you'll see how the movements in other coins and other tokens relates to that specific crypto that you're looking to trade.
So far, we discussed holding the crypto that lets you buy and you hold the coins. What are some of the advantages of using, let's say, a broker like 8Cap or any other broker to trade cryptos? What are some of the differences, things people have to think about?
Yeah, and that's a great question. And I guess that top echelon of traders out there who are in the minority compared to, the long-term hodlers is the idea of speculative trading. Looking at the market, trading price action, sentiment over short time periods, using technical analysis and other methods to find movements and take profits on that. And the great thing about that is derivatives are, I guess, a really great avenue to do that through. I don't see crypto derivatives. I see them more as an and product than an or product. I mean, no one's saying to go in and pile all your money into leveraged crypto tokens and forget about the underlying instruments. But what you'll see is that as markets swing, they move up and down during these crab season sideways movements. The trading derivatives is of more interest to the trader because you can take profits in both directions. When the market goes up, you have a buy trade. When the market goes down, you have a sell trade. So there's just more opportunities for you to take profit. You can also trade on leverage as well, which I guess really empowers you as a trader to be able to risk less of your capital in the markets. And I think during downward trends where you don't want to be taking your crypto in and out of the market, you want to be holding during the bear markets. taking a smaller amount of your capital out of your wallet and then putting it into derivatives trading allows you to trade with less money. And whilst the market is going downwards or sideways, you can be trading those swings with less capital on leverage to essentially take profits in different parts of the market. So it's really a complementary product to the underlying crypto. So I guess in summary, went on a bit of a tangent there. There's more opportunities for you to trade, take advantage of upswings and downswings in the market, and you can trade on leverage as well. So you can use less capital when you want to take advantage of those movements.
How does the fee compare and the commission compare? So if you buy cryptos, then you might have a pretty high fee in terms of, especially like recently in the ERC network, where it's like really, really high fees. Of course, there are some networks that are cheaper for sure, but how does that compare to trading with a broker?
Yeah, great question. Well, in terms of fees, trading derivative as opposed to the spot market, like you said, spot market comes with a variety of fees that can come from both the exchange, spread markups by the exchange, and then underlying blockchain fees like gas fees on Ethereum or various other fees that come into play. Now, sometimes they're more, sometimes they're less than derivatives, to be honest. But I think when you're trading derivatives, it's really just a simple experience of trading the spread, which sometimes can actually be less than the underlying spot market at times, depending on the broker that you're trading with or the exchange that you're trading the spot market with. So generally speaking, it's a much simpler trading experience that's easier to understand. And the thing about, I guess, gas fees and things on the underlying networks is that they're also they grow in tandem with market activity. So we were seeing like during May this year or during the peak of Ethereum price movement that sometimes people were placing Ethereum trades where the gas fee was costing more than any of the gains they could have made on Ethereum over the next month. So, whereas if they come in on a derivatives contract, one, they can trade at leverage. And so they don't have to put up as much money in the first place. And two, they're not paying any of those fees. The difference is, I think, when you're trading derivatives is you pay funding fees or swap fees, which are put in place to really balance the buyers and sellers in the market. But depending where you trade those can be quite minimal. I know with EightCap, for example, we've sort of taken to a daily swap fee, much in the spirit of forex, just because it's an easier experience. I know when you trade with a lot of other more offshore centralized exchanges that offer futures, you're usually paying swap fees or funding fees every 4 to 8 hours. So yeah, that's generally cutting into your gains more consistently than, I guess, getting a once a day charge. So we're coming in quite competitive there.
Could be good if you explain how the derivatives work. So people might think that when they buy, let's say, cryptos on the broker like EightCap, what does the money go? What happens? People might think that they give the money to the broker and they kind of trade against the broker. How does that all work out with the derivatives?
Yeah, and it's a great question because, look, I think there are a lot of other CFD derivatives brokers out there that in their marketing almost make it out like the client is trading actual crypto with them. I have a lot of friends who've, traded with, some of those brokers out there because the marketing just says trade crypto with us, trade crypto, and people come in and, they think they have these coins in their wallet, but they're just taking up a long-term position on a CFD or a derivatives product, and they're just having all their profits eroded by high swap fees and funding rates and all of that. So I think with us, when it came to pricing these cryptos, I guess just a bit of background on, I guess, what our motivation was for launching these, just to give a bit of a backstory. So I think in terms of the world of crypto derivatives, we really split it into two camps, being, I guess, an onshore regulated experience and an offshore unregulated experience. And sort of like each was lacking in a certain area. I mean, we looked at all of our regulated I guess, competitors onshore. And, look, they had security of funds, fiat on and off ramps, great banking relationships. They obviously were licensed and very compliant with AML and KYC standards that were very high. But then you looked at the product and, some people out there are charging like $30, $40, $50 spreads on Bitcoin, sometimes as high as $200 spreads on a Bitcoin CFD. And they're only really offering 5 to 10 crypto CFDs. The trading hours aren't always great. The liquidity is not always strong. So great compliance, great regulatory and banking, terrible product. Then we looked offshore at a lot of these decentralized exchanges. And they were offering these derivatives contracts with really high leverage, probably too high for my liking, just to have a safe trading environment. And they were offering really tight spreads. But the other flip side of the coin is that they don't really have any licensing, no banking relationships. We've seen a lot of them lose their banking relationships because of their lack of compliance. Some of you see some offshore CEOs, pretty much being chased by governments and that essentially. So it's not a great environment to be putting your money with. So really big like disconnect there, because onshore you get great security, bad product; offshore, good product, bad security. So I think we wanted to come in and really marry up both of those so that we could give people a great product for them to trade, really tight spreads. We've seen that really beating a lot of what else is out there by sometimes up to 90 times cheaper spreads, and swaps that are roughly about over 100% cheaper than our nearest competitor. So we can really deliver that in the environment whilst also having various different licenses with ASIC in Australia, SciSec, FCA. Not that we can offer cryptos in FCA, but we're offering it in this regulated environment with banking relationships and offer a greater sense of security. So to get back to your question in terms of, well, what happens when someone trades crypto derivatives with 8cap? When we first approached this in terms of how we aggregate and how we price our products, there's so much out there right now in the crypto world that it's almost hard to choose. There's traditional forex liquidity provider institutions. There's some really cool, I guess, prime clearinghouses coming up in the crypto space. There's your traditional crypto exchanges as well as these really cool DeFi protocols that are out there. So with that, there's so much room for liquidity in not just the spot market, but in the futures market and a lot of other areas as well. So when we looked at it, we sort of said, well, how exactly do we price this? Where do we get it from? All of these had their different pros and cons. So being greedy, I just said, let's get liquidity from everywhere. So we decided to build our own pricing engine for that and gather liquidity and pricing and the products from all of these different sources that all have their different pros and cons to offer really the tightest spreads and best trading conditions to clients. So when clients are effectively trading as crypto and sending it through to us for the contracts, we're really pricing that off very deep underlying liquidity from a variety of sources for their trade to be placed on. So yeah, we've really tried to come out with our best foot forward here in terms of offering tight spreads, good swaps, and great trade execution.
One of the questions I had is, what about the margin requirement or the leverage? Is it the same as forex? Or I know some people have a hard time trading CFDs, especially the index, because it's too big and they have to have a too big account to be able to trade them on some brokers. How does that work with the 8cap?
Depending on where you reside and which jurisdiction of ours you come under, the leverage is different. But for most of the world, we offer a maximum leverage of 20-1 on crypto, which I think is a good sweet spot for us at this point in time. A lot of other onshore competitors are really doing 5-1, not really wanting to take on much exposure or pass a lot of exposure onto the market on it, which isn't really competitive. Then offshore, we're seeing a lot of exchanges offer 100-1, sometimes even higher. And in that, we're really seeing a lot of clients getting slipped, incurring negative balances, and it's quite messy. So look, we're at 20-1 for the time being, as we've just launched this offering, and we see that as sort of a sweet point in the middle of those. As we're comparing that with FX leverage, obviously FX is a really different market. We currently offer up to 1 to 500 on FX. So yeah, quite a different offering. But with crypto, I guess you see much different prices to index markets as well in that sense. So you can take up much more interesting positions and take advantage of much higher swings and volatility as well. For example, we see 10% swings in Bitcoin, whereas we're not really seeing swings like that in maybe the FTSE or something, or 20% or anything in the FTSE anytime soon. So even though it's less leverage, I guess we're doing that from a place of caution because, yeah, if you're trading something that swings 10, 20, even on some of the other coins we offer up to about a bit over 250 cryptocurrency CFDs right now. If you take it on a really volatile one that's swinging, sometimes doubling every day, if you're on the wrong side of the trade at, too much leverage, your account's going to get wiped out. So yeah, we're really trying to find a good midpoint solution here between giving people enough buying power or trading power and not giving them so much that they're going to end up, with a blown up account if the market swings rapidly. So yeah, it's really a balance of being competitive and protecting clients as well.
How low can you be on the position sizing? Can you take like the smallest thing you want for, let's say, Bitcoin, or do you have to go with the minimum size for the trades?
Yeah, we don't actually have a minimum size on it, which does set us apart from a lot of other regulated CFD providers with crypto. So the way we've aggregated this liquidity is we can pretty much take on pretty much the smallest increment of trade really on any coin that you want to take down to micros on a lot of them as well. On the max side, obviously, There are some caps, just liquidity constraints as well in terms of how deep the book is at the time and that. So there are some, I guess, exposure caps as well. But again, that sort of comes from a place of, not wanting clients to take on too much exposure in relation to their account balance, which is something you have to be really careful on when you are trading on a leverage product.
I think one of the big advantages of trading cryptos with a broker like this is that you have a stop loss, which you can have in buying cryptos. Like you can just set a price where you're going to sell or transfer your crypto somewhere else. Is the stop loss going to be respected well with 8cap, or is it something that it's kind of still a bit messy with the moves in cryptos?
So yeah, we do offer stop loss and take profits. Obviously, we also have trailing stops as well, so you can slowly take profit or slowly enter and exit positions, which is something that I'm a big advocate of in my trading, to average up and average down, just to really capture the gains and lock in a good weighted average price. In terms of stop losses being respected, I mean, the crypto market doesn't function really in the same way as the FX market. So having, I guess, fixed stop losses isn't really something that is on offer. And I would always say to clients to be wary of brokers who do always offer this, in the sense that, in my experience, anyone that offers or promises a guaranteed stop, usually there's a high premium that you have to pay to have that enabled. Or they're offering a guaranteed stop, but the spread is so wide, you're already had that loss pretty much accumulated on your position. So we don't offer guaranteed stops. The crypto market is chaotic, it is volatile, and sometimes your stop can be surpassed beyond what you set it as. But that's, I guess, just the nature of crypto. That same risk that might cause that to happen is the same reason people really want to trade it, because you get those big swings. That being said, we hope that with efficient execution, fast latency, and tight spreads, that if your stop does get surpassed, it's minimal in comparison to a lot of other competitors out there.
Yeah, and the same problem is in stocks as well. If you trade stocks, you're gonna have the same problem with your stop loss. So that's not that bad, but you have to get used to it for sure. As a forex trader, you gotta get used to that.
Yeah, it's in every market, and I've never seen a guaranteed stop product by a broker that hasn't had a massive list of asterisks next to it, like a higher premium you have to pay, much wider spreads. Like there's always a lot of catches to it. So if your broker is offering that to you, or that is on the table, yeah, definitely read the fine print, because it's never as it seems.
Where would you tell people to go if they want to be able to learn cryptos? Do you recommend any websites, any maybe resources that they can go through?
Yeah, I guess it's a tough question, because I think crypto is such a vast world. It depends what they want to know. Do they just want an introduction to crypto? Do they want to learn how to trade crypto on a day-to-day basis? Do they want to learn about DeFi? I guess my favorite resource, and again, I'm a bit more, I guess, interested in crypto, so it might not be the best place to start, but if you really want to see interviews with a lot of great people in the industry, or learn a lot more about, I guess, DeFi protocols, I'm really a big fan of Bankless. They're a pretty great website, and podcast as well. So I listen to a lot of stuff they do, but again, that's a bit more on the deep dives into the technology. But yeah, if you look out there, there's a wealth of resources for learning crypto from scratch, even the basics, and all the way onto the trading side of it as well. And 8cap's actually putting out a lot more content in the future around this, with more events, webinars, and email outs in the future, as I guess we get further into the space.
Yeah, and that's something I really appreciate about 8cap, the brokers, the fact that you have a lot of resources and events that you organize and things to teach people about cryptos, have them learn more and kind of connect with traders who know what I talk about, which is a really good thing. So that's really awesome.
Thanks.
Do you have any details on any events coming up? I know you have a crypto fest coming up pretty soon. Do you have any details on that?
Yeah, we have. We're sponsoring an event called Crypto Fest coming up soon. So we're getting some really cool, more on the trading side. We're focusing on, obviously, being a derivatives broker, which I think is really exciting, because I always find a lot of events in the space. Whilst I'm a big advocate for the technology, I think we see a lot of, I guess, when it comes to technical analysis and day-to-day trading, we do see a lot less events and a lot less education. So we're really trying to build that out in the space. So yeah, at the end of this month, we have Crypto Fest coming up, which will have 5 to 10 guest speakers talking about specifically trading crypto, and yeah, it's going to be really good. So we'll definitely try to plug that in the description here, or put that out somewhere.
If you guys want to join that, I'll make sure the links below so you can sign up for that, and that's going to be, I think, a pretty good event for sure. And also a big thank you to you guys for sponsoring this crypto week at Desire Trade, which is awesome for sure. So thank you guys for that a lot. I appreciate it.
No, it's good. It's been good to be here, and yeah, we really like your channel. So yeah, I was really excited to get on and really I guess promote our offering through you. So yeah, really excited to see how it goes.
Perfect. Anything else you want to discuss or talk about? Anything else that we didn't mention so far? I think it's good for people to know more about.
No, I just think, look, we're seeing crypto derivatives grow in popularity. They're trading at 5 times the spot market right now. So there's never been a better time to get involved. I think a lot of people think coming off the boom at the start of the year means there's less opportunity. I sort of always counter that by saying it's like that's a great thing about derivatives. Like even if the market's going down, you can still be right. So you can really put your money where your mouth is and really just trade on the downward trends. Or when it's a great sideways market, you see all these great price channels to go long and go short in. So yeah, I think I'm just really excited for 8cap to have this offering. It's a great time to be in crypto derivatives, and yeah, just really keen to see where the space goes from this point on. But look, thanks for having us on, Eddie, and it's been a good time, and yeah, really keen to have a watch after.
Awesome. That's really cool. And obviously, next step, people is to open an account with you if they want to start. And we'll put links below for that for them to open an account with you. I know we have a couple of bonuses to give people if they open an account and trade with 8cap, which is pretty cool. Pretty excited about this for sure. Where can people find you if they want to connect with you or reach out after this podcast?
Oh yeah, definitely. Well, look, I'm always a pretty transparent person. I'm always up for a chat, whether you're in the space or not. You can always find me on LinkedIn at Marcus Fetherston, or you can reach out to me, marcus.featherston@eightcap.com. Or if you just want to go on the 8cap site and talk to support, they can always put you through to me. So yeah, my door's always open, keen to have a chat, whether it's just talking the markets or you're into the tech side. Yeah, reach out to me.
Awesome. That's really cool. Thank you very much, Marcus. I appreciate your time. Again, you gave, I think, really good advice for people who will get into cryptos. I think it's going to be good for people and myself as well. So I appreciate it a lot. And we'll catch you guys pretty soon.